Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Thursday. It is the 7th of March. More selling today as the pullback continued. A little more selling here today. And good afternoon, Derek. Good afternoon, everybody. Hope you are all doing well. You had a great day both in and out of the market here today. Another day of selling for the most part across the board in the market as we start to take out some shorter term support levels and some interesting things developing. We might be going into next week at a decision point, from looking at some of these charts on some hourly time frames, even daily time frames. It looks like it might be time for the bulls if they want, kind of the textbook type of pullback. They might have to start getting ready to buy here real soon. So we'll take a look at that. Very light on the earnings front going into tomorrow. S&P 500 company, only Costco is the only one reporting here after the close today. Just a handful of stocks and no S&P stocks here tomorrow. So really, really light on the earnings front here today. Just taking a look here at some of the biggest losers on the S&P 500. Of course, you had Kroger. They had an earnings miss, and we all know that crazy stuff can happen when that happens, right? And so, technically, we certainly did break some support, but definitely a catalyst here on that front. But you're seeing Mosaic testing a pretty significant support level. You're seeing a win kind of taking out a previous swing low. Jefferies broke support here today. A lot of selling and still an upward trend, but on OI. So some of these big losers on the day, it's not so much that they were the big percentage losers, and some of them, while Kroger was a pretty big percentage, most of these other, stocks weren't huge, percentage-wise downward movers, but you're seeing them kind of challenge support levels in certain areas. So we're definitely seeing a little more weakness on the technical side, I think, than we have been accustomed to, is things really, testing major support or a lot of times even breaking those major support levels. As far as some of the big gainers, some of the top S&P gainers here today, it still looks a lot like a stock picker type of market. To me, you're seeing some, things breaking support. Macy's. So I've been watching Macy's to break for support what seems like forever. I know it hasn't been, but it seems like that finally did it here today. You've got EA that's kind of pushing a resistance level at around 100. And you got CenturyLink kind of rallying up a little bit. Big test of support in a few of these things. So you're seeing a little bit of these trends holding up, breakouts. It really looks like a mixed market right now to me overall. And I think as we kind of look at what some of the different components in the S&P are doing, that is kind of what, at least what I'm seeing personally overall in the market. But right now, I still think it's safe to say we are in kind of that selling phase, whether it's pullback or you think it's more. I think we're still in it. Taking a look at the S&P 500 on the short term, on the 15-minute time frame, a little bit of a gap down to start the day. Some selling began, rallied up, kind of another leg to the downside. Looks like we had some short covering at the end of the day overall, as we kind of had the last half hour or so, little bit of a bullish rally. Not a whole lot to make of that necessarily, other than maybe some short covering going on. I think when we get into the hourly charts, and you can kind of see this on a lot of different charts, when we met yesterday, we looked at this support level that had still held up for us. So we were still holding up on support on an hourly time frame. Only our shorter term time frames had really started to generate, signals, at least via breaking of support. We got in on the action here on the hourly chart here as well. Once we took that support out on the open, it was really easy to work down to that old support level, which is lining up with its 200 hourly moving average. I know not everyone uses that, but I think it's worth at least mentioning. Personally, still not a lot of signals that we're flipping around. But if this support level can't hold, as we're kind of looking where we may stop from here on short time frames, there's not a lot of significant support until we get down about 20, just around 27. Now we will have a little bit around 27.20, which may be the first level of support I'll be keeping an eye on if this support level does break. And right now, I think there's more reasons to think it can than can't, just with the way the intraday charts are looking. as we look at the daily on the S&P, still looks a lot like a pullback. I don't think you can say we've taken out trend or anything. At least I can't say that just yet. But I do think there are reasons to believe that we haven't quite sold people to get back in on this thing just yet. So we'll have to see if that happens tomorrow. But while we're seeing what on the S&P, we're seeing this in a lot of different sectors and some of the other indexes where they're kind of at these hourly type of support levels with a little bit of room to go to the downside before they work into another potential support to catch them. So if the buyers want this to turn around quickly, we're kind of starting to get to those levels, as we will see as we kind of progress. So closing below the 9. So again, still a little more bearish momentum than we've been accustomed to pretty much all year long. I still don't personally think that it's bearish. I just think it's not bullish, if that makes sense. And good afternoon, Whitney. Great to see you. I hope all is well. On your little picture there, you're always hanging out in the sun, and I'm always so jealous because it's still winter here. So it might be winter where you're at too, but on your little profile picture, I can see you hanging out in the sun, and that makes me jealous. So over in the NASDAQ, going to look very, very similar to the S&P, closing below that the 200-day moving average, as well as that 20-day moving average. That short-term 9 has flipped around and is starting to push to the downside. So we are, however we're individually interpreting them, I do think, at least in my eyes, we are seeing some sell signals. Is it enough for me to say this is bearish? No. You guys know me. I'm fairly slow. I don't change my ways, dramatically unless I absolutely have to. But definitely will read that as another little bit of a sell signal. If you go into that same hourly time frame on the NASDAQ, very similar situation as to where we are on the S&P, hanging out at an old resistance, old support zone, 200 hourly moving average. So, these things can act as support catalysts. If they don't, there's just a little bit more room to go to the selling side, I think. And so while we're seeing it, in the indexes, we're seeing it, in some of the sectors too. So yeah, there you go, Whitney. Well, I don't know. Maybe misery loves company, and I'm sad that you're getting the snow too. But I'm, comforted by knowing I'm not alone. But just know that I feel your pain, my friend. I'm not in nearly as much snow. We've actually melted quite a bit, but we still get snow almost every day. It just can't stick anymore. It's been warm enough not to. Over in the Dow, very similar situation. Below the 9, still well above the 200. We just had more room. On the Dow, we have now worked into that first old level of resistance. This should be, and at least for today was, good enough reason for the sellers to stop, and at least maybe a few buyers to come in. As you kind of look at the tail that formed here on the Dow Jones, working just below that and kind of rallying back and kind of closing right above that old resistance level. Again, want to just pop into the hourly one more time, seeing very, very similar type of situation. So we're seeing these downward moves. We went sideways, we broke a little support, and we're really seeing that slow but steady skid, right? And so on these hourly time frames. So definitely something we're going to want to keep an eye on. I guess what that really means to me is overall, I'm still looking at this as more of a pullback opportunity than go bearish, broadly speaking. It just means tomorrow's not that day. Probably, I expect to see a little more selling, or not, everything to flip around and start going crazy to the bullish side tomorrow. Who knows what will happen, but those are my expectations. Russell kind of caught itself as well on that old resistance. It's a little bit ahead, I'll see if I can say that, ahead of schedule of the other indexes, I think, having, broken down and closed below, some old resistance, current support, and its moving averages here yesterday, hanging out at a support level. If this one falters, just realistically speaking, as I'm trying to think of where this might be going, probably should expect into that 1495, 1450 range. That's going to put us at the 50-day moving average. That's going to put us at this, old little, it wasn't very long, but we were range bound here. Wasn't that long ago when we were looking at 1500 as a resistance zone. So I think for me, really the price action today led me to believe that the selling is not quite done just yet. For the most part, I don't think we're taking out daily trends or anything like that, but we are seeing more, sell signals, I think, on the intraday after today's price action. Personally, we are also in kind of some interesting decision areas on some of our sectors. XLB, for example, much like the Dow, it kind of broke that old resistance on the intraday, rallied up and closed right on top of it. So at least for today, that support level has held. A break below this would probably be a little bit more room to the downside before too tempting for buyers. I'm not sure if I'd call that the 50-day moving average, but I think that's probably the easiest one to call it, although I wouldn't really expect, barring some heavier selling, it to pull back that far. If this gives out, I do have to worry a little bit about some folks interpreting this as a failed pullback. I don't think that I would do that, but that doesn't mean nobody would. We did stop, we tried to get going, and we haven't broke yet, right? Haven't broke yet. So, hey, good afternoon, Ilka. Good to see you, my friend. I hope you are well. So keep an eye on this support level. We keep getting pushed into it. We're still, hanging around that 20-day moving average, R9, just like most other areas. And that's always something that's a little concerning if you are bullish. Again, it's one of those things that I don't necessarily think you have to be bullish or bearish. You just can't be both at the same time, right? At least broadly speaking. You can, of course, have a bullish and a bearish trade. A lot of times you do. But this 9 kind of flipping around in a lot of these areas, it's hard to call that a good bullish signal. And we're seeing it, over and over again in the indexes and in the sector ETFs. Seeing more stocks breaking support. So a little bit weaker technically, I think, than we are, definitely been this year. I think this is going to be an interesting test for us, which, we'll see where it goes. The breakout, that's why I love breakouts. You're always getting the momentum, right? There still may be some great pullback opportunities to develop early next week, but the break of 56 is still in play, right? It's just probably not happening tomorrow, and maybe it's not happening at all. That's why I love breakouts. We get that momentum in and through them. I get made fun of for loving breakouts sometimes, but I don't regret it. So over in energy, we continue to hold up at that 65, just continue to test it. Can't get going one way or another. I know, Ilka, we were talking a little bit in the halftime report about the K trade, and you may or may not think this is a great candidate for it, but it's a really good one to kind of use as an example, basically where we have a very clearly defined trading range. And if you just kind of think about, bullish and bearish signals, a break of resistance would be a bullish signal, right? And I think that would be a really good bullish signal. Personally, we're not there yet. We may not get there, but I will like it if it does break that 67 resistance level. On the other side of it, the break of support would be a sell signal. If this does break support, we zoom in here, we could say, well, we went sideways, we double topped, and then we broke support. So basically I don't know which way it's going to break, but I figure sooner or later it is going to break one way or the other. And that's kind of why it's called a K. Well, I don't know exactly why it's called a K trade. Kleine said, Coach Kleine, I don't know, you may or may not know him, Ilka, but I'm sure a lot of us do. He said that one of his students, when he was talking about it with him, said, it looks like a K, and that's why he called it a K. I always think he called it a K because his name's Kleine. And I know Kleine, I've known Kleine a long time, so I lean towards, he just didn't dare call it the Kleine trade. He wasn't that vain. So I love Kleine. A lot of people do. But that's all that it is. One way or another, we are coming out of this range, and that will be a signal one way or the other. And well, I'm open to trading it either way if that happens. So hopefully that explains that a little bit better for you here today. And I think this is a prime example of it. I do think a break of the support level is absolutely a bearish signal within the energy sector. Some of those energy stocks are already kind of breaking support. Halliburton broke some support today. SLB kind of has flipped around a little bit. And so we're seeing a little bit of weakness on the individual components. As long as we're in this range, I'm not really going to think too strong about being bearish. But if this does break, I will absolutely call that a bearish signal. Whether we call it a tradable signal or not, I guess we'll have to decide. I still believe a break to the upside would be a better tradable signal than a break to the downside. But I would personally say both are signals that could be interpreted, whichever way they go. So another boring, another back and forth day. Eventually, we're going to come out of that range one way or the other. And I expect there to be a little bit of a short-term price movement when that happens personally. Over in financial, one of our areas that's kind of, taken a little bit of a turn. We were holding up that support. We kind of looked at those, those really basically the week's lows at that old breakout point, gap down and got hit, one of our harder areas to get hit today and closing well below that support level. I don't think it's taken out trend. Again, that's kind of where I am in a lot of these sell signals that we're generating. Yeah, a lot of the healthcare, particularly some of those healthcare plans, but it's even kind of trickling into some of the other healthcare areas, aren't necessarily, I have done things to break trend, but, on an ETF level, here in the financial ETF, I don't think it's broke trend just yet. Like I said yesterday, I think this area in particular is shaping up much more appealing to me on a breakout. And I'm patient. I'll wait. We still have those major levels of resistance on Bank of America, on Goldman Sachs, on several of the banks, pretty clear levels of resistance, which a break above would be a pretty good signal. I'm not really still very interested, and today did nothing to change my mind from a pullback point of view. Broadly speaking, in the financial sector, a little bit worried. I still like a break, I really do. And as long as we're holding our previous swing, I'm not going to be looking too bearish. Now, if we work to the swing and rally back up to this resistance, that might make for an interesting bearish development, but we're at least probably a week from that potentially happening. So we'll see it if that's the way it wants to go. But really trying to come up with where is support on the ETF. I really think you have to call it the swing low, which is lining up with the 50-day moving average. There's just not a lot. We, had a one-day bounce, right here, I guess you could say, and maybe that can catch it as a support level. But with the way it is right now, again, a turnaround candle can change my mind, but until I see that turnaround candle, I'm going to assume that the financial sector has a little more room to pull back before it's testing a level of support that might be, at least broadly speaking, appealing to traders. On the other side, here we are in the industrial sector ETF. We all know how strong it was and has been so far. We've seen a pretty good pullback over the course of the week now, the last trading week on this sector. We worked right back into that 74 here today, did form a little bit of a hammer candlestick. So we saw some money coming in or some bears coming out or both here at that 74, which is of course that old high, that 200-day moving average. A fairly tempting, at least I would imagine, price point from a technical perspective. So I don't think it's there yet, but the price is now right. I really like where we are from a pricing perspective on the industrial sector as a whole, certainly on the industrial ETF. But we haven't seen that turnaround candle, right? Today is a little step in the right direction. So, Derek, yeah, basically the easiest way for me to explain it, at least in my head, is it's where it stopped, where it's done things before, where we've seen price action. So the reason we're looking at 74 here on the industrial ETF is that was a major resistance level for us in the past. We really dropped down from that price point, right? And then when we came back into it and broke through it, we really had a pretty easy run until that next level where you can see at 77, we have had a whole bunch of history. So think about, support and resistance. Support is where it stopped going down and started to go up. So I believe this is a support zone. I believe this is a place that should be tempting for buyers to come back in because we've seen resistance. We've seen a major breakout with a nice little run. We're still in an upward trend. So I believe that this is going to be support. I have reasons to suspect that based off of its previous history. Now I have to see it start going up, right? So a good way to look at it is support is where it stops going down and starts going up. And resistance is where it stops going up and starts going down. So even if you don't believe me when I say we have a lot of history at 77, that was an area to keep an eye out for as we were working into it. Now you do believe me because you don't have to believe me to believe the truth, right? It did get to 77 approximately, of course, and it stopped going up and it started to go down. So when you're thinking about price action, Derek, that's kind of the best way I can describe it is where did it stop doing what it was doing and go the other way? The only thing I know with absolute 100% indisputable certainty is last time we got to the $77 range, we went down, right? And so will it happen again? Well, I'll be keeping my eyes open. If we get to it, I'll be watching it. But I do know that that is where price changed from being bullish to being bearish, at least short term. Does that explain that at least okay for you, Derek? I know you're fairly new to trading and it'll get easier as you go, but I hope that gives you a better idea of kind of how to do that as you're looking for it on your own stocks and as you're going through your own process. The price is right in my head. We're at support. The signals aren't there yet, but we are in an interesting place from a pricing perspective. If we look at this on the hourly, just like the overall market, hanging out right at that rising 200 hourly moving average. So if we can't hold here, there's room, again, just like the market. If this price point doesn't entice the buyers to come in, a little bit more room to the downside. So this is probably an important price, especially as you think about it, the industrial sector as a whole. I mean, we've just seen history here. Below this, we do have a lot to prop us up. We have the 200-day moving average. We have this old zone. So again, we haven't taken out trend in my mind just yet. I'm really interested to see what our conversation about industrials are tomorrow. Hopefully just a small green candle. So we'll see. Or a small red candle would be okay too. So keep an eye on 74 or that 74 zone. I think at least today we've got evidence to suggest that, yeah, we're not the only, at least I'm not the only one looking at 74 as a potential support zone in this sector. Fairly similar over in here. So yeah, so fairly similar with the tech ETF too, right? Pulling back actually looks kind of like a nice pullback. Maybe one of the, if I'm just thinking about, I want to play a pullback early next week or potentially tomorrow, although my rules would never allow on any of the charts that I see here today to allow me to do that. This looks pretty good, still making higher highs and higher lows. Nice little sell off of a resistance zone into all of its moving averages and old resistance level. Actually looks very appealing from a pullback. So, I really expect to like some pullbacks next week. But like Ilka said, that momentum is increasing. And until I see that turn, I need it to basically, I can't do anything, right? Never the dude that's going to buy on a big red candle. The price is right, but the price action, how we got there or how we're behaving there is not. I need to see some sort of shift in momentum. And if you think about, kind of what happens when you're looking at these pullbacks, basically you just go into a downward trend on the intraday. And as long as that downward trend on the intraday, maybe we'll go into a 15-minute, as long as this trend continues, well, we're going to keep going down. Right. So basically we need that intraday to kind of flip around, get that momentum back to the bullish side to give us that confirmation, or at least I know I have to have that happen. So I'm always looking at these areas where, yeah, this would make sense if this is where it happened, but now I have to see that momentum. I need to see somebody step into it from a bullish point of view. But the price is interesting. No confirmation by any means just yet. More selling over in staples. I mean, you saw an okay day in the REIT and the real estate, in the utilities. Nobody seemed to want to get into the defensive staples sector today. It continues to be relatively, in my mind, weak. Got in on the selling here today. Testing, what I think you could argue is it swing low. And I think you could at least make an argument that if we break this support level, this is topped out and giving us, a bearish, more bearish signals. It hasn't broke yet, might not break, but we are testing that. So again, I think the moral of today's story is the pricing, whether we're looking at it on shorter term timeframes, like those hourly charts on the indexes, or daily timeframes on staples, on tech, on the industrials, on the materials, we're at these old support zones that if these ones give way, there probably is reason to suspect we can sell a little bit more until we get into more, interesting places as buyers. So another pretty weak day over in the material sector. Again, not a lot has changed. For me, I still am not a huge fan and probably won't be until we either see some reversal characteristics after it sold off for a while, or we hold support and break this resistance zone just around that $55 mark. It just really continues to struggle. And while the market's kind of sold off, these guys were struggling before these last couple of days of selling. They were showing, at least in my mind, more weakness, than pretty much most other areas. Over in the utilities, we tried to break and run today, ended up kind of selling off of those highs on the ETF, still closing up on the day, still, hitting an all-time high, still showing a lot of strength overall in the utility sector. Really, again, it's just it's been strong, and then people maybe want to get a little defensive and go into the more defensive sectors during this pullback. That certainly probably didn't hurt its chances. We did come off of the highs pretty well, right? If we go into, maybe let's go into a 15-minute chart, see this intraday action. This run up happened basically right at the beginning of the day, and then we did kind of go back and forth for the most part from that point. So maybe not as strong as the percentage would say, but the simple truth is it's continuing to show a lot of strength. It's still above all of its moving averages. It just hit an all-time high. I have a hard time understanding a bearish argument for utilities when they just hit an all-time high. Now this candle, yeah, probably not the greatest looking candle, right? A little bit of a gravestone type of candle formed here today. Clearly, in my mind, not a sell signal. Really, we're just trying to, a lot of it's fairly extended. A lot of these utility stocks, again, just like yesterday, a lot of the stocks in the S&P that hit new 52-week highs today were utility stocks. No huge surprise there. As long as the breakout holds, I think you have to be looking at it bullish. I don't think, whereas we can see other areas in the market where I think we are objectively seeing some sell signals, I don't think you could make the same case here on the utilities. Another good day, but could have been a lot better if they could have held that morning momentum. Healthcare basically took one day to fill up the rest of that space. We broke support yesterday, worked right back to our previous support level here today. That is where we called it. That is where we held. Well, this is an important price. Again, a break here, and we're seeing a lot of weakness, is not good from a bullish perspective. These guys are definitely showing weakness. And while at first it kind of got started with those healthcare plans, and they are definitely dragging this down, make no mistake about that, it's now worked into some of the other areas. This area in particular is still very mixed. There are still good looking trends, Lilly, Merck, ABT. There are still some very strong looking stocks that, I'll probably have on my pullback watch list for next week. But there's also things that are not looking all that great. There are things, more support. I think CI broke its support level here today. Amgen is hanging out right at a major support level. And so this is an important price, I think. Beyond this, I think you have to at least be leaning bearish. As I go into the scouting report meeting tomorrow, if this closes below this support level, I will go in with a bearish bias. Right now, I think overall it's still more neutral. We have taken, short-term sell signals are absolutely there. I don't think broadly you're looking at this as a buy, but I'm not ready to turn on it just yet. But a break of this will really test that. That is certainly the previous swing low. You could maybe argue that this was, but I don't think you can argue that this one is. If this one is broken, I think that's violating trend, which you have to look at it. In my head, I have to look at it from bearish whether I want to or not. So probably an important price point. If that gives out, any of these little, the moving averages, but they're right below us. Our next support level really isn't back down here until that, high 87 range. And we're probably seeing more stocks break support or continue to sell. If we do break that, probably should expect a little more movement to the downside. Definitely have a hard time liking this one, at least right now. I'm still very open to those nice trending stocks, though. I am okay with pullbacks in that area. Just broadly, yeah, that break of support, and this one, if we break this one, I have to call it bearish whether I want to or not. So that's why I have trading rules, right? So over in discretionary, a little more of a pullback. We finally gave up. We've been watching this bounce around in 110 to 112 for over a week now. Today, got caught up in the selling, broke through that, closing right below the 20 and right above the 200-day moving average, also right at this old high. So just like on the way up, there's lots of little things, lots of little levels of on the way up, it was resistance. Now there's lots of little things that can act as support catalysts. The 200-day moving average, this old high. If this high does break, though, we still, we don't really have a lot until we work into the 107 range. So, it might be, I still like this area, but again, I still really like the break of 112 at far more than I like the pullback opportunity that may be developing right or wrong, I'm going to like the tech pullback better. I'm going to like the industrial pullback better, the materials better, and financials, discretionary, even energy. Those are more breakout zones for me right now. And we'll see if that makes any sense. And we'll see if we ever get the signals one way or the other, right? But definitely some selling over here today. A lot of the companies, again, this is a really mixed bag type of area, but you've got, your Macy's, your Urbans. Both of them have hit new 52-week lows today. Macy's broke some support. So definitely seeing some weakness in some of the individual components, but you still have things like Starbucks and Walmart that aren't really looking all that terrible at this point in time, at least. Really like the break of 112. The pullback, maybe it happens on Tuesday or Wednesday next week, and it actually really makes a lot of sense. But today, I don't think it does. Keep an eye on 110 to act as a little bit of short-term resistance if we can push back through there and we don't carry this momentum over into tomorrow's open, because we've seen it time and time again and talked about it a lot. It's that momentum the next day, right? We did break a little bit of short-term support. That momentum is always kind of the kicker. So 110 can potentially be a little bit of resistance to be looking at. If this kind of gives out, well, I don't necessarily expect it to come to the swing low down here at 106.50 to 107. There's really not a lot of support until we get there. So we'll probably be the area that we kind of have to look at going forward if we continue to see more momentum. So again, it's kind of in an area where it's going to be interesting. Hopefully tomorrow is just boring. A nice little doji going into the weekend. Over in real estate, just continuing to do what real estate does. Another back and forth on the intraday, holding up nicely overall, not really showing a ton of movement as it's just gone sideways, kind of right on top of that old breakout point, right at that $35 range. Very indecisive. I don't think you can make a good bearish argument for it at this point in time, but I don't think it's a great bullish area, at least from a swing trading perspective, in my mind right now either. Just needs to kind of spend some time shaking out a little bit, developing something clear and tradable. Develop something like energy has, where we have that clear top and bottom that we can kind of decide what we want to do if and when one of those areas are broke. Right now, very, very choppy, but overall holding up well. Holding up well. There's no two ways about that. And lastly, over communication services, no surprise, the market selling off. We were knocking on the door of that 47 resistance yesterday. We kind of sold off along with it here today. Google's an interesting one in here. I think probably maybe not the most. I didn't look at every single one of them, but of the big names is an interesting one because we did kind of catch our footing at that old resistance zone. So this could be, from a technical point of view, that pullback catalyst, right? We're hanging out at the 9 EMA. We're testing old resistance as new support. The chart doesn't look great. Again, it's, I couldn't if I wanted to, but the price is definitely interesting from a, in my mind, from a technical point of view. We'll see where this one goes. But again, overall, continues to be very stuck, within that same 47, 45 trading range. And until it comes out, I'll probably continue to be boring and say the exact same thing each and every day. So for the most part, not a lot has changed, but in some ways it's changed a lot. Whereas just a couple days ago, we had room to pull back in some of these areas to support zones. Now we're starting to work into them. And so while it doesn't specifically have to happen tomorrow, we're getting, in my opinion, to those price points where if we want these pullbacks, we're going to have the bull step in. I'm never the first one, and I never will be. We will see where they go, but we are testing support in several of these areas. I think we have to be careful when we're looking at healthcare. If that support breaks, I do think we have to, worry about the trend has reversed and gone from a potential pullback into a potential trend reversal. Seeing plenty of selling over there in the healthcare sector right now. But you're also seeing some really interesting pullbacks. And I was in the halftime report hanging out, and we were seeing really good bullish trade setups and really good bearish trade setups. And I think that's probably what we are looking at for the most part right now. And until we start to break down in the market, I will continue to believe that for better or worse. So that's where we find ourselves after, a little more selling than, it's just been a while since we've seen 2 days of selling. On one hand, you kind of worry that, is this something bigger? On the other hand, you're saying, well, we basically flew up to resistance, struggled at resistance for a week, we knew sooner or later one of two things was going to happen. I think we literally use those terms. We're either going to break resistance or it's going to push us down. This really isn't a tremendously shocking news, but anytime you haven't seen selling for a while, you wonder, is this something more than a pullback? Guess time will tell. We will see where that one takes us. VIX had a little bit of a spike today, as we getting a little more selling than we have been accustomed to. I don't really think there's much to see here, but I do think we can say, and we talked about it after that first big candle that we had a few days ago, looks like maybe there's just a little more volatility coming into the market than we'd been experiencing throughout most of February. A tremendous amount. I don't think it looks anything like it did, back in November and December, but a little more volatile. I think we probably should expect that. Maybe we want it, maybe we don't, but I do think it's probably reasonable to be ready for a little more volatility if that's the way it wants to go. So that, I don't really think the VIX, it makes me feel that way, but just the price action, it makes me feel that way at least. Dollar, big up on the dollar. Euro really sold off today and broke some support, some, fairly longer term support, not long term, but a support level that I would view as important. Dollar, of course, went the other way, knocking on that door of that 97, the 60 or so resistance. Once we cleared that 97 today, with the euro tanking, the dollar really got cooking. We're at the top of the trading range, and while this is something I'm thinking about not for tomorrow by any means, I just want to go to a monthly chart because that's how boring I want to be with this guy. We've been very sideways, right? On the monthly chart, we're hanging out at the resistance after being sideways for basically months on end. A break of that resistance, is a pretty, in my mind, bullish signal. I don't think, I'm the dude that's going to be trading it tomorrow if it breaks it by any stretch of the imagination. But there's a reason, I've said I'm neutral until it comes out of this range, right? Now we've got to get through that. The only thing I know with 100% certainty is the last several times we've tried to break through that 97.60 area, we failed every single time without exception, right? So it should be a tough fight. But if the euro is going to be selling off, that may make it a little bit easier. We'll see where it goes. But a break of that resistance, I absolutely will call a bullish signal because sooner or later we are coming out of almost any trading range. I mean, it's technically something can stay in a range forever, but most of the time, eventually we do come out. So we're an interesting price. I'm not going to be surprised one bit if we see some selling tomorrow because, again, this resistance has been tough to break. But you have to appreciate the strength and definitely a little bit of selling over in the euro. Having a hard time understanding maybe why you'd want to buy that. The dollar looks a little more appealing, maybe if nothing else by default, right? So keep an eye on that 97.60, 97, 70 zone. We've seen it together. If this is your first time, we've watched it work into that, look really strong before, and get pulled, back down into that trading range. So it's tough to get out of these ranges. That's why it's a signal when we do, right? So that's where we find ourselves on the dollar. Really interesting over in the dollar. Gold continuing to just kind of hang out. Try to hold that, try to build that little intraday floor at that previous swing low. Again, much like healthcare, that's an important low because if that low breaks, I think you have to be worried about the trend being taken out. Now, we've not seen that happen just yet. I think we still have to be very careful with gold from a trading perspective, from the bullish side of things. I don't think we're getting any clear signals just yet. Hanging out at support. Will support hold or will it give? We'll have to wait and see, but I don't think any reason to believe that tomorrow's the day that gold is going to turn back bullish based off of the way the chart is developed. Keep an eye on 13. It kind of goes without saying. I know I don't need to tell you guys that, but that is probably a level of resistance that once again should really have our eyes glued to it. If we do work back into it, that will be a very interesting battle. If we can push right through it, I'll probably be back on gold as okay to buy, because that should be a tough fight. At least in my mind, it should be. Over in silver, little more of a drifty nature than gold. It took out that, the 3-day floor yesterday, and we didn't move a ton by any means, but we have taken that little floor out. Let's see if the hourly chart will work for us there. Yeah, so we're just continuing to see that drift to the downside after kind of taking out that little floor on silver. We do have that big $15 marker just not very far away. That should be an interesting fight. In addition to being a nice round number, who doesn't like saying 15 instead of 15, 12 or whatever? We've got a lot of price action here. Old support, old resistance. This should be very, very important from a pricing point of view, in my mind, for silver. So I expect it to overall continue to drift towards that. That should be a price that I would think just, from a pure price perspective should be tempting. I don't think from a charting perspective would be tempting at all, at least the way the chart looks right now. So we'll keep an eye on this one. Not much has changed though. Overall, 15 is my support level. 15 and a quarter is my first level of resistance, and 1550 is kind of the resistance it almost has to go above with the way it looks right now for me to be back on the buying bandwagon. So don't expect to have to make a call on silver tomorrow, one way or the other. Over in natural gas, we continue to push at that resistance level. One more day, natural gas, if you don't mind. And then a break next week. I'm getting very interested, kind of having that little high base situation at that old resistance. We've already tested it once, albeit briefly, to get pushed down. We continue to rise above the 9. We've got the 50-day moving average sitting right on top of us, pushing us down into this nice little pinch situation where we're stuck between these moving averages. Eventually, we're going to have to do something here. Hopefully, that something is not tomorrow. Every day that passes, I think this is, I've said, many times, I think it's a tradable signal, a signal if we do break to the upside. And every day that passes, I like that potential signal more. Now, it hasn't happened yet, and it doesn't have to happen at all, right? But we are seeing it hold up well. We are seeing that 9 continue to rise. We are fighting resistance. But beyond that resistance, you do have to honestly question the 50-period moving average. From my perspective, it's so close. You might as well, I may as well let it close above it before I make a decision one way or another. I don't feel like I'm going to be missing out on a whole lot. So at this point in time, I think a break of the 50-day moving average is probably the bullish signal that I'm potentially looking at. We'll see if we get it. From the other side of it, I think you really have to keep support down here at that 270 mark. So you're either sideways, I think that's probably the best way to look at it until we come out one way or the other. But I'm actually really interested in the way it's developed. One more day. Don't break out on a Friday because, well, at least you'll make my decision easy. I won't do anything. I still don't dare hold natural gas over the index. And for those of you who don't know, if you're following natural gas but don't trade the futures market, UNG is the ticker symbol for one of those natural gas ETFs. So if you want to practice around with it or whatever without trading it in the futures market, and that's a lot of us like that as an instrument. So lastly, over in crude, another sideways day, just like energy. I do think you can look at this as one of those K trades. Breakout one way or another is a tradable signal. We are getting, now we're, almost, pushing 3 weeks in this trading range, right? We're building some pressure. So one of these days, one way or the other, we are going to break. And I think either side is a tradable signal. And again, really the question for me, and the longer we're in this range, the more comfortable I feel about not being scared of 59. I would have been terrified of 59, a week and a half ago. But the longer we're in this range, will I monitor it? Yeah. If it concerns me, I can wait. Not a lot of resistance until we work into that 62 area. Beyond that, potential 59, as we've talked many times before. On the other side of it, if we do break to the downside, really not a lot to catch us until that 50 that's got this nice little fish hook kind of going on and that old support zone. So whichever side breaks, there's potentially room to run in the short term, just from a purely technical perspective, I think. Hopefully, again, I don't want anything to break out on a Friday. I'm that kind of guy. We'll see if we overall on the commodities, with the exception of the dollar, knocking on the door of a pretty major resistance level. Most of our commodities are gold, silver, natty gas, crude. I mean, they're basically in that same spot that they've been the last few trading days. So, ladies and gentlemen, that is going to do us for the market recap today. But as always, you guys, it's great to have you here. Thanks so much for joining me. It's always more fun to do this with friends. Be sure, if you are new around here, to subscribe to the channel and hit that notification bell. And be sure to join us over at Tackle Trading on Twitter as well. It's a great way to be able to communicate with our team really fast and easy. And I see a lot of you guys over there, and it's always fun. for better or worse, you guys are my friends. I don't know if that's a good thing for you or not, but it's always good to see you guys over there too. So come on over and join us. You can find me at Frank Martin 23 on